Hi guys, I'm Okuchuku from Crypto Gist. Today I'll be talking about an investment opportunity in the form of an ICO. The name of the ICO is Taas, meaning token as a service. Um, this channel is all about cryptocurrency, which is blockchain and blockchain investments. So, what is Taas? So, Taas is um, the first tokenized closed-end fund um, that utilizes Ethereum blockchain, cryptographic audits, smart contracts to provide full transparency to its customer. So, first of all, before I get into that, this is the site for their ICO. Basically, they have 11 days left for the ICO, and this the amount they've raised was um, a little bit above $4 million. Um, to get a complete documentation of what the concept is about, the technology, um, and so on and so forth, you need to download their white paper. You go to TAS.fund and come down here, click on this white paper, and it will be downloaded. So, okay, if you have to say what's the closed-end fund, basically, closed-end fund is just a pool of investments that is governed by a body. And the way this pool of funds, investment fund is gotten is, um, is by allowing the public to participate through an initial public offering. But in the case of cryptocurrency, it is called an initial coin offering. Okay. And basically, what TAS is trying to do is trying to move closed-end fund into blockchain environment. And okay, you ask yourself why TAS. Basically, what TAS is trying to do is this. Because of the potential in the blockchain ecosystem, and the potential of or profit potential. TAS is trying to help or to generate a means through which people can invest in blockchain without really having to do all the work and all the getting all the years of experience and so on and so forth. So trading in the blockchain ecosystem is quite difficult because uh, basically blockchain technology is kind of new, although it's about 9 years, but still kind of new, especially in this part of the world. And in order to make profits, make reasonable profits, you need the technical know-how. You need to be very informative, as in, because right now there are over 600 coins in the crypto ecosystem, and in order to before you invest in any of them, you must know what they're about, the community behind them, the technology, and basically that information is kind of a lot for a whole lot of people, as in. So what and basically because the technology is relatively new, there are not a lot of investment tools that people can use to trade, unlike the traditional market, which is like very old, and there's a lot of tools. Almost anyone can use those tools to trade, but this technology is kind of new. So that is where TAS comes into. So, what is the goal of TAS? Okay, the goal of TAS is this: their goal is to generate fund, and in order to generate that fund, to get people, members of the public, invest, and according to the amount you invest, you have a share in the portfolio or in the company, in quotes. So they make um, they trade or they make trades with the total the total income they get, and the profit is then allocated back to the investors based on your share in the company or in the portfolio. So okay, let me go down here. Um, there are some things that I that are used in the system. Um, Cryptographic auditing. Okay, this is basically what is this cryptographic auditing? This is a means through which the company will be very transparent. Actually they are trading with people's money, and obviously when you invest in a company, you would like to know what it is, what are they doing with the money you invested. So basically, the way this cryptography auditing works is it's a means to which anyone, even people that have shares in, or people that have tokens or bought tokens, or people that are not members, can always see what the money in the system is being used for. And this is to ensure transparency. Everyone knows what is going on with the money that they've invested. Also, smart contracts. Basically, what smart contracts do is this: they help in the allocation of profits. Um, uh, this way it is done automatically. It's not done manually, where you say, okay, what so where in a scenario whereby people are the profits are not allocated in the correct ratio. People are getting more, people are getting less. This way, it's all done it's all done um through code, so there's no bias, so everyone gets according to your share in the company. And also there's something else. Okay, that's it. I just talked about cryptographic auditing, then profit distribution through smart contract. So then there's something else. Also there's something else, hedging. This case, say why the first glance might suggest that over 700 crypto currency markets offer plenty rooms of diversification of hedge funds. Okay, basically what they are trying to say here is this: the company is not, they are not really going to scatter their total capital among all the cryptocurrencies. They choose the major cryptocurrencies to invest in order to reduce the risk and everything. So basically, I want to talk about how it works. Okay, um, TAS, the TAS community are only going to invest in blockchain, sorry, blockchain technology, and basically they are only going to use trusted exchanges for this investment, such as Polonia, Bittrex, Kraken, and so on and so forth. So this is what the business model is like. Okay, um, what they do is this: after investing, the profit made is being divided into percentages, and those percentages are shared accordingly. Okay, this is what happens. 50% of profit made is shared among investors, that is among people that contributed to the ICU through smart contracts. Then 25%, yeah, that is okay. 25% of the profit is being put back into the portfolio, and there's a reason why this is done. Okay, this is to increase the worth of the portfolio, because, for example, thereby increasing the value of each token that is held by the portfolio. So this is what happens if, for example, let's assume at the ICO, um, they sold out $100, which is 100 coins. In that case, each coin has an intrinsic value of $1. If a profit of let's say $100 is made on their first investment, and 25% of that is $25 is put back into the whole portfolio. in that case, there's something called the net asset value. So at first, when there was just $100 and 100 coins, the net asset value is $1. But now, once that $25 is put back into the system, you have a scenario in which 100 coins is worth $125, meaning each coin or each token is worth $1.25. So you see, the more profit they make, and percentage of that is put back into the business, you see that each token owned by the portfolio or owned by the investors will increase in value while they are still getting profits through smart contracts. So it's kind of a win-win situation. Okay, I'll talk about that. There's something else. 10% of the initial the money gotten from the ICO. Like for example now, let's assume excuse me, let's assume at the end of the ICO they make $5 million. Okay, 10% of that is going to be used as a reserve fund, and basically that that the how do I say it? The cash gotten from that, the 10% of the total income is going to be hedged on Bitcoin, because Bitcoin is kind of the most stable currency and now, so it's hedged on Bitcoin. So this guy, what that is going to be used for is like it's fund that is going to be used for as for during the rainy day when let me say investments are not going well, or the system or the portfolio needs um, an amount of money to be put back into the system to stabilize it. So that's what that 10% is going to be used for. Okay. So talking about investment tools. So uh, so these investment tools are basically what how um how we do trade, how we do, what are the techniques that are going to be used to trade. So some of those investment tools include long-term cycling investment. Excuse me. Okay, that's the long-term cycling investment. This, I think, to my knowledge, this involves transfer of 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 money from one currency to another as the value increases. Like for example, uh, selling um like buying something when it is small, and as it is increasing in value, you sell it up, and like what you can see here, they are transferring values from large cap markets to altcoins to bitcoins to and so on and so forth. Kind of a new technology, but they've been working on this for a long time. Another thing they are going to use is cross exchange arbitrage. Cross exchange arbitrage simply means um, because since there are several exchanges, if you discover that they are usually let me say for example, you may check, let me say at a particular time, Bitcoin will be worth $1,000 on one exchange and $1,010 on another exchange. So um, arbitrage is basically a means in which people, how they do this is they buy Bitcoin at 1,000 from one exchange and sell at 1,010 on in another exchange. They are thereby making like a $10 um, gain per each Bitcoin. But imagine when you use a large amount of money, that $10 will be multiplied a lot, and that's another way. Another way is through swing trading, which is short-term trading, which is basically buy low, sell high, buy low, sell high, and so on and so forth. Okay. Next is market potential. So sorry, I'm not like going through all this. I didn't want to start reading out all the whole white paper, so I like made some jottings But all these are